Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 and the triple Qs for the week ending Friday, December 2nd, 2022. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the developer and president of Simple Market Signals at simplemarketsignals.com. The first chart that we're going to work off of is a weekly candlestick chart of the S&P 500 that goes back 2 years. So 2-year chart. Every candlestick on this chart does represent 1 week of trading, and the 40-week moving average is the green line right there, and we've got this horizontal blue line set at 3,900, which has been a key support and resistance level on the S&P 500. We'll touch on that, but let's start off with the performance for the week. The S&P 500 was up 1.13% this week, and we closed above 4,000 again, closing at 4071.70, and we did kiss the 4,100 level this week. We traded as high as 4,100.51 on the S&P 500. Now, I've drawn this trend line here on the wicks of the candles going back to the first of the year. Of course, we know that the all-time intraday high so far on the S&P 500 occurred intraday on January 4th at 48.1862. So we've got the line that starts there, and we've had a couple of these contra-trend moves here this week that have brought us up, and March here, right? We hit the peak of 46.3730, but we've obviously had this series of lower highs and, of course, lower lows as well. But this trend line here, we can see it's drawn on the top of the wicks of these candles. Well, this last week, even though we had a really nice week and, by the way, had the first weekly close above the 40-week moving average, which we cannot underestimate the importance of that at this point, right? But we did close above the 40-week moving average this week for the first time since clear back in March. So, this was a big deal, right, from that standpoint. But we did not quite get up to the downtrend line, all right, so which at this point would take us up just above 4,100, if you can see here over on the right where my cursor is circling. Well, the question becomes here, when we're about 17% off of the low that we hit back on October 13th at 34.9158, right? So we undercut the 3,500 level for literally about 10 minutes on October 13th, and that set up, that triggered this counter trend move, right? So we still are in a downtrend. That's the trend. We've got a counter trend move now that has lasted 1, 2, 3, 4, 5, 6, 7, 8 weeks. This one here that went from June to August lasted 10 weeks. So if history is any guide, we might get another week or two out of this and hit our head above this 4,100. One option would be to roll back over and go lower. However, right, keep in mind, we're in a seasonally strong period. It's pretty rare, even in a downturn, for December to be a negative month. So it's possible, guys, possible. Look, none of us can predict the future. A lot of people think they can, and they will make predictions, and that's fine. I'm not one of those guys. I know I can't predict the future. What I can do is look at data and look at charts. And with my extensive background in financial services and analyzing tens and tens, perhaps hundreds of thousands of charts or more at this point, I've been at this a long time, we can look at these things and look at an if this then that scenario. All right, so we've got one of two things that's probably going to happen. We're going to come up here over the next week or two, hit our head on that 4,100 level, and if we get that high, right, we could roll over next week, and then roll back over and take another leg lower, or we're going to possibly break through to the upside and maybe get to 4,300 by the end of the year. That is a possibility, okay, and we would be naive to think it's not possible. Now, I want to be clear. I don't think the downturn is completely over. I think this is a counter trend rally. The question is, how much can we get above the downtrend, right? And get a little higher for another, few weeks or a few months. That is completely possible, all right? But if we don't have any type of resolution to a lot of the things that are going on around the world, the very unfortunate situation in Ukraine, if that continues and or possibly spreads, heaven forbid, let's keep our fingers crossed that doesn't happen. But if we continue to see supply chain constraints, that is obviously extremely inflationary. So, if that gets worse, that's worse for inflation and worse for all of us, from just trying to get food and everything else, right? And obviously that's going to increase the cost of things, at least temporarily. But the opposite is also true. If we can get some resolution to some of these things, if these things don't get any worse, then we might start to see some improvement, right? And if inflation, if we can get some resolution to some of the supply chain issues, that will go a long ways towards helping the Fed fight inflation, all right? Because to a large degree, and Jerome Powell even admitted that, and I was really glad to see that he did this last week when he spoke. And that was really, to a large degree, guys, dependent upon or this whole week, right, was around Wednesday when he spoke, because we had a huge up day on Wednesday, and we had 4 negative days this week and 1 positive, and that pretty much, so we had 1 positive day this week, and you're looking at the, what happened, right? We have a positive week because of 1 day, and that was all about the Fed chair, Powell, and what he said. But I really like the fact that he did admit that a lot of the inflation is due to supply chain issues. So with that in mind, at some point, right, we'll get some resolution on these things, and that will be one of those catalysts, perhaps, that will help end the downturn and help put us into a trajectory that's higher. So wanted to add a lot. I wanted to add a little bit of economic information in here. I don't do that a lot, but I wanted to, because there's so much going on, I wanted to kind of throw a little texture on this. But we really do need to watch this downtrend, guys, in that 4,100, maybe 4,125 level, somewhere around in there. If we can penetrate that to the upside in the short term, we may continue to see 42, 4,300. Some very optimistic people are saying that we might even hit 4,400. I think that might be a little stretch here by the end of the year. But the point is, if we can temporarily at least break the downtrend and get above this downtrend line and continue to close above the 40-week moving average, at least in the short term, we might have a tradable rally here. But I would be quite surprised, if this, 10 minutes below 3,500 on October 13th is the lows of this entire downturn. Now, let's take a quick look at, and this is the triple Qs now. A lot of you guys use this, but I think it's important for us to look at both of these things. Whether you just do the Qs, it's important for you to understand what's going on the S&P 500. If you just do the S&P 500, I would still encourage you to understand what is going on with the triple Qs. All right, and the reason for this is, if you go back over the history of the stock market, you generally don't see really strong upside if the triple Qs aren't performing in line with or outperforming the S&P 500, right? People can roll their eyes and question me, all they want, but those are just the facts, all right? The strongest rallies are when the triple Qs, the tech sector within the S&P 500, these types of things are leading us higher. And I do not think that that's going to change. Right now, value is outperforming growth, but that is not necessarily a good thing. Now, we looked at the fact that we just this week closed above, on the S&P 500, closed for the first time on a weekly closing basis above the 40-week moving average since back in March, right? But if we look at the Qs, what we can see here is we have not had, including this week, we have not had a weekly close above the 40-week moving average on the triple Q since clear back in January. All right. So it shows relative weakness to itself. But look at how far below, even this week, right? We were up 196 on the triple Qs and again up 113 on the S&P 500. So the Qs this week outperformed the S&P 500. But we're still well below the 40-week moving average. The 40-week moving average is downward trending where we're starting to see that flatten out a little bit on the S&P 500. And when we draw a downtrend line on the triple Qs here, connecting the tops, the wicks of some of these candles, where we've, these counter trend rallies in the past, the one from June to August took us up there. We're still quite a ways below that downtrend line. We're still well under the 40-week moving average. So we can see on a relative basis, right, just this quick analysis, that the triple Qs, and they're not that far off of their bottom, right? You can see here, they too bottomed in October, but, we haven't seen that same relative strength over the last 7 weeks during this counter trend rally, 7-8 weeks. We just haven't seen that same strength in the triple Qs that we have in the S&P 500. And so this is, I think, another just way to look at the fact that, yes, this is a nice little rally. We might have a little bit more to the upside, but guys, I really don't expect, even if we do get a few more weeks or another month or whatever out of this rally, this is not a super strong rally. I do not think this is the end of the downturn, and I do expect at some point, whether it's over the next few weeks or maybe sometime in Q1 of 2023, I do expect us to have another leg lower, and very likely, I think, from a technical standpoint, and for many other reasons, I think it's quite plausible that we're going to undercut the 3,500 level on the S&P 500, and of course, other things like the triple Qs would take another leg lower, very likely as well. Okay, so for right now, counter trend rally, nice weekly close above the 40-week moving average, still a little bit below the downtrend line, both on the S&P 500 and well below it still on the triple Qs. So we definitely want to watch that. But at least we've had a little bit of a respite here over the last couple of months, guys. But we'll keep our fingers crossed that we can get a few more weeks or perhaps even longer out of this. But unfortunately, it's we're probably not done yet. 3,900, by the way, I promised I would touch on this. And so I want to make sure I do real quick on the S&P 500. We can see that this has been a super important support and resistance level this year on the S&P 500. You can see on these weekly closes, we came down and stopped weekly closes, right? We had some intra-week trading here in May below that, but you can see the bodies of the candles closed for several weeks in a row above this 3,900 level, and then we fell below it in June and kind of hit our head on it, so to speak, right here, and then finally broke above it. And so anyway, the bottom line is, right, you can see, especially since May, beginning of May, you can see how important 3,900 has been. The point is, as long as we stay above 3,900, we're going to be okay. But we're being pinched here, right? We've got a downward trend line here. We've got 3,900, which we know since May has been a super important support and resistance level. So this is definitely a level to watch. But if, whenever we roll over and we start to trade again below 3,900, that's when I think we could see some pretty quick drops as we saw here as well as here, right? Because we know that that is a very, very important support and resistance level, so it could act somewhat like a cliff, if you will. And guys, I'm not talking about like 15, it could happen, right? But I'm not trying to be emotional here and talking about a 15% overnight drop or, like a lot of people say. But just understand that as long as we stay above 3,900, it's probably not going to be horrible. But, when and if the S&P 500 rolls back below 3,900, that to me is going to be one of the keys to knowing that we're probably on our way down to a lower low. And of course, we've been hitting a series of lower lows on the way down. So just another piece of data for you guys. Make sure you watch the rest of the video. Thanks for your time. I'll see you in the next video. Are you a business owner or a busy executive, including a doctor, dentist, attorney, or realtor? Do you manage any of your own money, including in your 401k or IRA? Are time and money important to you? If time and money are important to you, then simple market signals should be important to you as well. Simple market signals is for business owners, busy corporate executives, and other professionals who want to cut through the stock market BS and get down to the facts. If you value your time, if you value your money, you need simple market signals. Simple market signals is based on a proprietary formula developed by a former financial services professional with decades of real-world experience. Simple market signals is equity investing information simplified. Simple market signals saves you time and helps you understand market trends and risk management in a way few enjoy. Just try it. There's no contracts, you can cancel anytime, and a subscription to this information is less than 67 cents per day, and it's priced way less than it should be for the value it brings. To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. So again, go to simplemarketsignals.com and watch this video that's on our homepage. Again, that website is simplemarketsignals.com.